Welcome back to the closing bell. Just under 3 minutes to go of trade. We are approaching the lows of the day again, but let's start with this S&P intraday chart, because given the news we've had today, we really could be doing much worse. Yes, it's red throughout the day. We opened low, we steadily got worse. The low of the day was about 1 o'clock, and we're near the low of the day now, but we're only down 0.7%. And given that this is the culmination of months of trade fears where tariffs have been imposed and retaliatory tariffs have been imposed back, we really could be looking at bigger declines. And to highlight that point, if we now look at a week-to-date chart of the S&P, you'll see that those Italy fears abroad in Europe had a way bigger effect on the market than these domestic trade fears have done today. S&P for the week as a whole down 0.6, 0.7%, and down, of course, about 0.6% today as well. So overall, with all the fears this week, we're not down too much. The same is true of the 10-year Treasury yield. If we quickly look at that week to date, much more safe haven buying of the US bond market earlier in the week with the Italy fears than has been today. Yields, of course, down on the week, but have risen, in fact, during the second half of the week, kind of been flat most of the part today. Back to today, though, in terms of the equity market trade, we do, of course, see the trade impact on certain sectors. Industrial suffering for obvious reasons. Consumer staples as well will input prices go up, and only those boring sectors, well, the boring sector of utilities are up slightly. Technology also up slightly, which plays into the fact that the Nasdaq is the least bad performer of the big indices. It is only down about 0.3%. Currency markets are seeing an impact as I bring in Seema Modi, the expert on some of these emerging market currencies. The likes of the Mexican peso suffering, albeit, to be fair, the dollar is not strengthening across the board. It's in fact slightly lower against the euro and the yen. And still higher for the month. In fact, the euro has gone from 120 to 117 in the month of May, so a nearly 3% decline. But to your point, Mexican peso, some of the other emerging market currencies, they're lower against the dollar, but a smaller reaction. I think tariffs today, a big factor in today's move. We saw the formal announcement come out from the Commerce Department, stocks hit session lows, but in a different report on these two populist parties out of Italy potentially forming a government, and we came off our lows. We did on that news, and we'll see if Italy can pull that together, albeit overnight. The vote of confidence in the Spanish government might propose a different headline there. If we go back to the sector performance today, of course, only two just holding on to gains. Consumer staples, industrials very much near the bottom. We're also suffering a little bit on the energy front. Oil prices, again, under focus. Technology up 7% this month. Sharp outperformance compared to financials. Fourth straight month of declines there. We've got 20 seconds left of trade, and the Dow is down 250 points. So we've just come off those lows. The low of the day was 316 points for the Dow.